Most Americans are using credit cards completely wrong, and it's costing them thousands every single year. But a small group of people have figured out a system, a specific plan, and they're getting free flights, hundreds in cash back, and building better credit all at the same time. In the next few minutes, I'm going to show you exactly how that plan works. And no, it doesn't matter if you're starting from scratch. Welcome back to American Credit Guide, the channel where we cut through the noise and give you real, actionable credit strategies that actually work in the real world. If you're new here, this is the place where everyday Americans learn how to take control of their credit, their cards, and their financial future. Make sure you're subscribed because what we're covering today is one of the most requested topics on this channel. And trust me, you don't want to miss a single part of this. Most people approach credit cards completely backwards. They sign up for whatever card their bank offers, swipe it for everything, pay the minimum, and then wonder why their wallet is full of plastic but their bank account is still empty. That's not a credit card strategy. That's just expensive debt with rewards points you'll never use. The Americans who are actually winning with credit cards in 2026, we're talking free flights, thousands in cash back, zero interest on big purchases. They're not smarter than you. They just figured out one thing early. Credit cards are a tool, not a trap. And like any tool, the outcome depends entirely on how you use it. So let's talk about the plan that actually works. The first thing you need to understand is the foundation of every smart credit card strategy, and almost nobody talks about this part. It's called your spending ecosystem. Before you ever apply for a single card, you need to know exactly where your money goes every month. Not a rough guess, actual numbers. Because here's what most people don't know. The best credit card for someone else might be the worst credit card for you. If you spend most of your money on groceries and gas, you need a completely different card than someone who travels 4 times a year. The banks know this. That's why they make the rewards categories confusing. They're hoping you'll pick based on the commercials instead of the math. So step 1, and do this tonight, go back through 3 months of bank statements and categorize your spending. Dining, gas, groceries, travel, online shopping, subscriptions. When you see the actual numbers, the right card becomes obvious. This one step alone could be worth hundreds of dollars a year. Now here's where it gets interesting. The smartest credit card users in America aren't carrying one card. They're carrying 2 or 3, each one strategically chosen to maximize rewards in different categories. This is called a card stack, and it's the backbone of the plan. The typical high-performing stack in 2026 looks something like this: a flat-rate cashback card for everything that doesn't fit a bonus category. You want at least 2% back on every dollar with no cap, no games. Then a category-specific card for your biggest spending area, whether that's 5% on groceries or 3% on dining. And depending on your lifestyle, possibly a travel card with a strong welcome bonus to fund flights and hotels without touching your paycheck. But here's the catch most people miss. The welcome bonus, what the industry calls a sign-up bonus, is often worth more than an entire year of regular spending rewards combined. We're talking $500 in cash back, or 60,000 points that can book a round-trip flight. And the only requirement is that you spend a set amount in the first few months. If that amount aligns with your normal spending, you're essentially getting paid to buy groceries. That's not a loophole. That's the game. Now let's talk about the thing that can either make this strategy brilliant or absolutely destroy it: the balance. Because none of this, not the rewards, not the points, not the free flights means anything if you're carrying a balance month to month. A credit card with a 24% APR will eat your 2% cash back for breakfast. You'll spend 12 months chasing rewards while the interest charges quietly cost you 3 times more. This is why the number one rule of any credit card plan that actually works is simple. Pay the full statement balance every single month, without exception. Not the minimum payment, not the current balance, the full statement balance. If you can't do that, you're not ready for a multi-card strategy. Start with one card, one category. Build the habit first. Here's what separates the people who build wealth through credit card optimization from the people who just talk about it. They treat their credit card like a debit card. The money is already in the checking account before they swipe. The credit card is just the vehicle for collecting rewards. The spending behavior doesn't change. Only the card in their hand changes. This mindset shift is everything. Okay, so you've mapped your spending. You understand the stack concept. You're committed to paying in full. Now let's talk about credit score, because it controls which cards you can even get approved for. And most people are making mistakes here they don't even realize. Your credit utilization rate is the percentage of your available credit you're using at any given time. Most people think 30% is fine because they've heard the rule. But the people with scores above 780, the scores that get you approved for the best cards with the best offers, their utilization is usually under 10%. Some keep it under 5%. Here's a tactic almost nobody uses. If you make a payment mid-cycle, before your statement closes, your reported balance drops. That lower number is what gets sent to the credit bureaus. Your utilization looks better. Your score improves faster. It takes about 5 minutes a month, and it can move your score significantly over a few months. Another one, and this is genuinely underused request, a credit limit increase every 12 months on your existing cards. Don't use the extra credit. Just let it sit there. Your available credit goes up. Your utilization ratio goes down automatically. Your score benefits. The bank makes you think a higher limit is dangerous. In reality, it's one of the easiest free score boosts available. Now let's open a loop here, because this part matters more than most people realize. The credit card companies have entire departments with behavioral economists and data scientists whose entire job is to make sure you spend more than you planned. The interface of your app, the rewards, dashboard, the special limited time offers, the notifications, it's all designed to pull you toward one behavior, carrying a balance. They make the most money when you're almost, but not quite, in control of your spending. So the plan only works if you automate the payoff. Set up autopay for the full statement balance on every card, every single one. This removes willpower from the equation entirely. You're not making a decision every month about whether to pay in full. The decision is already made. The system handles it. And while you're in the settings, turn on transaction alerts. Not just for fraud protection, but for awareness. The moment you get a notification for every purchase, your spending behavior changes. Studies show people spend measurably less when they see each transaction in real time. The card still earns rewards. You just stop letting the swipe feel invisible. One more thing people consistently get wrong with credit card strategy in 2026. And it costs them every year without them ever noticing. Most rewards cards have rotating bonus categories that change every quarter. You get 5% cash back on groceries in January. Then it switches to gas in April. Then streaming services in July. If you don't activate those categories, and most banks require you to manually opt in, you earn 1% instead of 5%. A family spending $500 a month in a bonus category just lost $160 in rewards over the quarter because they didn't click a button. Set a calendar reminder, quarterly, 5 minutes. Activate your categories. Check for limited time offers. Make sure your auto pay is running. That's the maintenance schedule for a credit card plan that actually pays you. Here's the bottom line. The Americans winning with credit cards in 2026 aren't doing anything complicated. They know their numbers. They stack cards intentionally. They never carry a balance. They automate everything. and they treat the whole system like infrastructure built once, maintained briefly, generating value quietly in the background. The banks are running a business, a very profitable one, but the rules of that business also create a path where disciplined, intentional users come out ahead. You just have to decide which side of the transaction you want to be on. And that right there, that's the credit card plan that actually works in 2026, not the one the banks want you to follow, the one that works for you. If you got value from this video, do me a quick favor, hit that like button right now. It takes 1 second, and it helps this video reach more Americans who genuinely need this information. And if you haven't subscribed to American Credit Guide yet, what are you waiting for? We drop new videos every week, breaking down credit cards, credit scores, and money strategies that nobody else is explaining this clearly. Got questions? Drop them in the comments below. I read every single one, and I'll personally reply. And share this video with someone you know who needs to hear this. You might just save them from a very expensive mistake. I'll see you in the next one.